Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Advanced Micro Devices Inc. quarterly report. Advanced Micro Devices, AMD, offers a wide range of businesses and services across three segments: data center, client and gaming, and embedded. Some of the key products and services provided by AMD include processors under various brands such as Ryzen, Athlon, EPYC, and Pro A-Series graphics processing units, GPUs, under Radeon Graphics and Radeon Pro Graphics brands artificial intelligence, AI, accelerators and general-purpose compute infrastructure for hyperscale providers, data center graphics under Instinct accelerators, and Radeon Pro V-Series brands FPGA products under various Vertex, Kintex, Artix, and Spartan brands adaptive SOC under Xinkminus 7000, Versal HBM, and Vitis brands compute and network acceleration, board products under Alveo and Pensando brands. These products and services cater to a variety of customers, including original equipment manufacturers, OEMs, public cloud service providers, system integrators, distributors, and add-in board manufacturers. The stock price skyrocket. Unpacking Advanced Micro Devices Inc. Rise Advanced Micro Devices Inc. AMD has witnessed a remarkable surge in its stock price, with increases ranging from 76.46% to 83% in the past year. This substantial growth can be attributed to several key factors centered around its advancements and positioning in the artificial intelligence (AI) market. At the forefront of AMD's success is its expansion into the AI accelerator market with its MI300 series of GPUs, solidifying its position as a strong competitor to NVIDIA. The company's data center segment has also experienced remarkable revenue growth, driven by strong demand for its 5th-gen EPYC processors and Instinct MI300 and 50 GPUs. Strategic partnerships and acquisitions in AI have further bolstered AMD's presence in the market. Notable deals include agreements with OpenAI, Nod AI, Silo AI, ZT Systems, and Cohere, as well as the introduction of its Helios rack-scale platform for AI. These initiatives have not only generated significant revenue, but also instilled investor confidence in AMD's future prospects. The company's strong financial performance and optimistic outlook have been key drivers behind its stock price increase. With a narrowing gap with competitors like Intel, AMD has made significant inroads in both the server and client CPU markets, further contributing to its record-breaking growth. The primary drivers of revenue growth or decline for AMD can be summarized as follows. Revenue growth is primarily driven by strong demand for key products such as Ryzen processors, semi-custom game console (SoCs), Radeon gaming GPUs, and EPYC processors. The data center segment also experienced significant growth due to the adoption of these high-performance products. On the other hand, revenue decline was largely attributed to external factors, including mixed end-market demand in the embedded segment and new U.S. export restrictions on certain semiconductors to China, resulting in an $800 million decline in revenue. Net income and profit margins. A significant increase in 2025. The financial performance of a company has shown significant improvement in 2025, with net income increasing by 62% and 144% compared to the same periods in 2024. The 9-month period saw a substantial increase of $1.665 billion, 143%, in net income. This growth can be attributed to various factors. Profit margins have also seen an upward trend, with gross profit margin rising from 50% to 51.6%, operating income margin increasing from 10.6% to 13.7%, and net income margin growing from 11.3% to 13.4%. The acquisition of ZT Systems in March 2025 is expected to further boost the company's performance by enabling end-to-end AI solutions and accelerating the design and deployment of AMD-powered AI infrastructure. However, higher depreciation and amortization expenses, $57 million increase, and lower release of reserves for uncertain tax positions, minus $853 million, have also contributed to the changes in net income and profit margins. Despite these factors, the overall financial performance of the company has shown a significant improvement in 2025. The company is indeed generating positive operating cash flow. This is evident from the financial summary and specific details provided in the report. The net cash provided by operating activities for the 9 months ended September 27, 2025, was a significant $5,109 million. Additionally, the operating cash flow for the same period was reported to be $2,649 million, further indicating a positive trend. These figures confirm that the company is generating sufficient cash from its operations to support its financial needs and growth. The company's debt level and interest expenses have undergone significant changes. The total debt has increased by $1,499 million, with corporate debt rising from $1,621 million to $3,256 million. This substantial increase in debt is reflected in the rise of interest expenses, which have grown from $23 million to $37 million for the 3 months ended Sept 27, 2025, and from $73 million to $95 million for the 9 months ended Sept 27, 2025. The company's financial summary reveals a mixed performance across its segments and regions. The data center segment stood out as a strong performer, while the embedded segment struggled with poor results. In terms of regions, China was negatively impacted by U.S. export restrictions on semiconductors and semiconductor technology. Additionally, the D5 countries, including Hong Kong and Macau, may be affected by new license requirements for certain semiconductor exports. The client and gaming segment showed initial success, but experienced a decline in performance over time. Management is optimistic about the company's outlook, citing strong demand for AMD products driving revenue growth. They anticipate continued international sales dominance and sufficient cash flows to fund operations and capital expenditures. The acquisition of ZT Systems will accelerate AI infrastructure development. Management also emphasizes the need to adapt strategy to meet evolving industry trends through timely product introductions and strategic investments. The company has made significant transactions through acquisitions and divestitures. In terms of acquisitions, the most notable ones include the purchase of the ZT manufacturing business for $3 billion and the acquisition of ZT Systems. On the other hand, the company has also divested its ZT manufacturing business to another entity for a cash and stock deal worth $3 billion. Concerns about inventory buildup and supply chain disruption are present in the company's financial summary. The total inventories increased by $1.579 million, 27.6%, from December 28, 2024 to September 27, 2025, primarily to support product ramp-up in data center products. This has raised concerns about maintaining supply chain efficiency and potential excess inventory due to overestimated customer demand or decreased actual wafer requirements. Supply chain disruption is also a concern, with risks including delayed product introductions, lower yields, and poorer performance of products when transitioning production to new manufacturers. The company's reliance on third-party logistics functions and intellectual property adds to the risk of supply chain disruptions. Additionally, potential risks such as IT outages, cybersecurity threats, gray market activities, climate-related natural disasters, water and energy availability issues, and termination of agreements with significant distributors or AIB partners could impact the ability to bring products to market. Overall, the company faces significant concerns about inventory buildup and supply chain disruption, which may have a negative impact on its operations and profitability. That concludes the financial summary for Advanced Micro DEVICES Inc. Feel free to comment below, and I will be happy to answer them when possible.